Hey everybody, it's Tara with Dwell Mortgage. Today we're going to talk about down payment assistance programs. So the first two categories I talk about are going to be really specific to Utah. The second two categories are more available nationwide. So if you are interested, if you're not in Utah but you're interested in loan programs that are available in other areas, skip skip ahead a little bit. That said, let's get started. All right, so down payment assistance. I get a ton of questions about first-time homebuyer programs and down payment assistance. There's really a solution for probably just about anybody, depending on what your situation is and what your goals are. So there are kind of four main categories that I work with in down payment assistance. So Utah Housing, that is our state housing program. I believe all 50 states have one. Your city or county grants, those are going to vary depending on obviously location, and they're all going to have their own requirements. There are certain lenders that have come up with their own in-house loan programs to help with this, and then there's 100% financing loan options, which means there's actually no down payment required on those if you can qualify. So let's run through these. So Utah Housing is the first one we're going to talk about. So Utah Housing is, like I said, our state housing finance agency. They offer options for all buyers, not just first-time home buyers. And just to give you an example of how prevalent this program is, they helped over 3,000 families in 2024. Utah Housing has several different versions of their program. Their most common type of assistance is in the form of a second mortgage. You actually end up having two house payments, your first and your second. That second mortgage is there to cover your down payment, and you can even roll some of your closing costs into that second mortgage if needed. They also have a $20,000 grant. So we'll talk about that. But first, we're going to talk about the three base programs. So First Home, this is their first-time home buyer version of their product. It is an FHA loan specifically for first-time home buyers. You will get the best terms on this, so you're going to have the lowest interest rate if you qualify for this program. Their second kind of catch-all program is, they just call it FHA or VA. It's available for all borrowers. You have to have a 620 credit score. The cool thing about this, which they changed probably in the past couple of years, is you can actually use this version of their loan program to buy a duplex and have an income generating property, which has not been allowed until they made this change. I want to say they did that like in 2023 or 2024. Anyway, so that's a really cool thing that they've added and updated. They also have a conventional version of their loan. It's a 3% down conventional loan. You have to have a credit score of 700 or higher, and it does have to be a 1-unit primary residence. Anything I talk about today does have to be for your primary residence, so one that you're going to occupy yourself. So those are the three base loan programs, and with that you either use the second mortgage or you get this grant. They call it a grant. It's really what we would call a silent second. So it is a lien on your property, but there's no monthly payment, and it does not accrue any interest. So you just pay that back when you sell the property. This particular money is for first-time homebuyers only, and the property that you purchase has to be a new construction under $450,000. So the idea with this program was really to incentivize builders to build at a lower price point and help people get into the first-time homebuyer market. It's a great program if you qualify. There's a couple quirky things about it, so definitely reach out if you have questions on how this works. It's slightly different. There's a few additional qualifications to get the $20,000 grant than if you're just going to do their standard first and second mortgage with any of their other programs. So I talked about this a little bit. The most common version of their assistance is a second mortgage. So there are a few quirky things on the $20,000 grant. It's a great way to get money with no interest, whereas on the second mortgage, they're charging you an interest. It's a fully amortized payment. All right, city or county grants. These will vary depending on what the city or county has available as far as funds, what their funding requirements, their money from, all sorts of different rules. So these are just two of the most common for northern Utah that have money pretty regularly. There are some other programs that have money on occasion, but you'll see that the most likely, I think, even if you're not in these two areas, you'll see a similar program where they do require the money get paid back when you sell the home because they want to keep funding this program. So they can't. There were versions of these where the money was forgiven years ago, but obviously that means then the money runs out. Okay, so Own in Ogden is $10,000 of assistance for primary residents. Similar to the Utah Housing Grant, it's a silent second, no interest, no monthly payments, and that gets paid back when you sell the home. There is also, they increase that amount to $20,000 if you are an Ogden City firefighter, teacher, or police officer. So if you work for Ogden City, that's one really cool benefit that they offer to you. Davis County is up to $50,000 in assistance. It's a really interesting program. They have a tight debt to income ratio requirements. They'll give you however much of that $50,000 you need to meet their debt to income requirements. So it's a little quirky. Not everybody gets the full 50, but you do if you need it. This one does accrue a little bit of an interest. It's 1% again on a second mortgage, but no monthly payments. Your home is sold or you no longer live in the property. So that's just one thing to keep in mind if you use any of these programs. There is a lien on your property. You will pay that back when you sell. So just remember that. Okay, lender-specific programs. Most of these are based off of an FHA loan. It's much easier to do kind of a grant or a second mortgage attached to an FHA loan than it is to conventional. So these are all FHA programs. And they're very similar to one another, but with a few slight differences. So first one is a 2 or a 3.5% forgivable grant, 580 minimum credit score. This one you can use to buy a duplex. And in order to be eligible for this, you have to meet one of these 4 criteria and this is in addition to, just the other qualifications of an FHA loan. But in order to be eligible for the assistance, you have to be a first-time home buyer or a current or retired public servant, or be below the area median income where the property is, or the property that you're buying is in an underserved area. So it's pretty broad. Even in the public servant category, they will allow volunteer work as an option to kind of check the box for that. So there's usually a way we can get someone into this program, there's usually a way someone is in something, we can get them into this program, or they meet one of these other requirements. Let's see. Okay, let's make myself a little bit smaller. So again, another FHA program that has a 3.5 or 5% second. This is a second-year mortgage. It's repayable with a 10-year over a 10-year term, or there is an option where you can choose for it to be forgivable after making 36 payments. So these will just affect the interest rate depending on which route you choose. So this one's a little bit different. You have to have a 600 minimum credit score. One cool feature of this version is you can do a 2-1 buy down on this program. That's not super common with a lot of other assistance programs. So that's a cool little feature of that one. You do not have to be a first-time home buyer for this, and there are not any income limits. So like I said, these two are very, very similar to one another, but depending on where rates are, what your requirements are, if you don't qualify for the forgivable one I just talked about, we could use this one and still get you some assistance. So The reason you might want to do a 5% second mortgage is if you needed to cover any of the closing costs yourself. So that's a nice feature. Okay, 100% financing options. A lot of people get confused about what this means. 100% financing means there's no down payment required. There are still closing costs charged on these loans. So those are the fees associated with getting the loan. There's just no down payment required to meet the eligibility of the requirements of the loan. Okay, USDA loans. I love USDA loans. I wish I got to do them more. Again, they're 100% financing. Property must be in a rural area. There are income limits based on the area and the family size. So those will vary depending on what's going on in your area and your state. The challenge with these loans, specifically here to Utah, is as things have gotten more expensive, it's just harder to meet the debt to income ratio limits of this loan. But if we can find a way to make it work, it's a great loan. The rates are really competitive. The mortgage insurance is really low. You don't have to be a first-time home buyer on this. Like, you just have to meet all the other requirements. So again, like I said, a really awesome loan. I just, with the debt to income ratio requirements on this one, I just don't get to do them as much as I used to. I wish I did. But if you're in a more affordable area and it's rural, definitely ask about it. Okay. All right. VA loans, again, 100% financing for eligible veterans. You have to be current or active. You can be current military or retired. If you meet the service requirements, we'll pull your eligibility from the VA. Make sure you check that box. And this is a great loan, really lenient on credit requirements, very flexible on your debt to income requirements. One thing people don't know is you can actually use this loan more than once, or you have more than one property at the same time. So there's no monthly MI, but there is an upfront funding fee. There is an upfront funding fee that gets rolled into the loan amount. It's kind of like a mortgage insurance charge. But if you have a disability rating, then VA waives that for you. So I love VA loans. Again, it's a super great option. Definitely take advantage of it if you're an eligible veteran. So now what? No matter what kind of loan you're doing, always like get your plan put together, get pre-approved sooner rather than later, especially if you are looking at Utah Housing or any of those city or county grants. Like, every version of those has their own little quirky things, and so you want to know which ones make sense for you and which ones don't, and really have an idea of what your options are before you get too far into the process of looking. Here's all my info. If you have questions, please feel free to message me or jump on my website. I'd love to help you get into a home this year. Thank you.